Ladies and gentlemen, welcome back to the channel. Of course, we do not have the camera. I am not in the studio and just completely forgot to grab it. But nonetheless, when an article like this comes across the newswire, we have to bring it to your attention. It says Disney's Avatar: The Way of Water gets coveted China release. And this is so important because this upcoming Avatar movie is going to be one of the biggest factors of AMC's next earnings call after the previous movie, Black Panther, did exceptionally well in theaters. If Avatar also does well, it's going to really drive up the actual stock of AMC. And there is something that is so crazy to even fathom about this movie that is a pretty clear indicator that it's going to be massively successful. And it's something I think you guys want to hear. It's actually the budget to make this Avatar film is off the chain, guys. So we're going to get into that. We're also going to look at the Ortex data briefly, talk about some other things as well. So let's get straight into it. Hit the like button, subscribe to the channel. You guys already know the dealio, and let's get into it with this article. So Disney's Avatar: The Way of Water gets coveted China release. The key point says Disney's Avatar: The Way of Water will be released in China on December 16th. Now, the significance of this is essentially you're going to get a really good headline. The last time you had this coveted release with China, meaning that the movie came out in America and China on the same day, that's all that means. It's going to go to China. It's going to go to American theaters the same day, December 16th. Essentially, the last time that happened was Avengers Endgame in 2019, and that is still the second highest grossing movie of all time for the box office release. Obviously, the significance of Avatar is that it is number one of all time for the box office release. So it's definitely a big deal. And that's partly why AMC stock has even been rallying over the last couple of weeks. People are projecting really good next quarter earnings for AMC. Nonetheless, let's continue on with this article. It says international ticket sales in general were a major factor in Avatar's box office success in 2009, as 2.13 billion of the film's total 2.91 billion in ticket sales came from outside the domestic market. Prior to the pandemic, China was the second highest grossing theatrical market in the world. Since cinemas reopened in the country, it has been one of the fastest markets to recover and generate box office success. And it says Avatar: Way of Water has landed a coveted release in China, a promising sign for a film that needs big box office sales to offset its massive budget. The long-awaited sequel to 2009's Avatar is only one of a few Hollywood films that have been granted access to the Chinese market in recent months. Government officials in the region, which began tightening restrictions on Western films even before the pandemic, have been strict about which films can be screened for its entertainment-hungry audience. The news was first reported by the Wall Street Journal and was posted on the 20th Century Studios official Weibo account. Director James Cameron has not placed a price tag on The Way of Water, but estimates suggest it could exceed $250 million. The writer and director told GQ magazine that the sequel budget is so high that the film will need to become the third or fourth highest grossing film in history to break even. That means the film will need to crack the $2 billion mark globally. International ticket sales in general were a major factor in Avatar's box office success in 2019, as 2.13 billion of the film's total 2.91 billion in ticket sales came from outside the domestic market. China contributed around $265 million. So this is obviously a big deal. And why I think this is a big deal specifically for us investors in something like AMC is basically $2 billion for a film to break even, doesn't happen all too often. That means there's a lot of projections out there that this film is going to well exceed $2 billion, potentially becoming the number 2 or even the number 1 biggest film of all time. If you get headlines like that, guys, that could start the AMC short squeeze. Now, I'm not going to go on to say that that's 100%, it's a guarantee or anything, but I could see that headline coming out and really see the shorts get squeezed out of their positions in a big way. Not only because that is just a good number and it's going to fundamentally help AMC as a business. That is all correct. But when you actually look at the Ortex data here, you're looking quite prime for a short squeeze, as we have reported to you guys over the last couple of weeks now. Still sitting as of today, November 22nd, at 20.06% short interest of free float, about 103.5 million shares sold short. Cost to borrow rate sitting at 51.5%, cost to borrow max at 83.42%, and the cost to borrow minimum at 30.24%. It's looking pretty good from my perspective here. And if you guys are unaware, essentially a lot of these shares that get lent out, they're not typically on a fixed kind of system. A lot of these loans, and when people take out short positions, a lot of those positions can actually vary depending on supply and demand, depending on the risk of the stock, going against people that are lending out that stock, right? Because if you lend out a stock, let's say AMC at $5, you lend out your stock, but you think it could go up higher, well, people want to be accounted for that risk, because if it does and you lend out your stock for a set amount of time, you're not going to be able to sell it. You could in theory lose money on that trade if it did go parabolic and you weren't able to sell because someone else had access to your shares. So that's kind of the logic of thinking, and that's how it goes in the investment world. Not a lot of things are actually fixed loans unless it's a house, and houses, generally speaking, are pretty safe, right? You can think of risky assets more on the lines of adjustable rate loans because they're riskier, and that is what is really going to help drive shorts out of their short positions. These cost to borrow rates are very unsustainable. 83% on the high end on a daily basis. I mean, you're looking at 40% cost to borrow rates for all day today. Over the past couple of days, they have been higher, in between that 90 to 100% range, sometimes being in between 60 and 70%. That puts a lot of pressure on shorts, and that is a lot of money that they have to deal out just to remain in these short positions. Not to mention, if you start to get avatar headlines that are, very good, or, people start to project that AMC is going to have really good earnings, well, you could see how just the short thesis or the probability of making money on your short position would go away, and you'd be more inclined to cover on that short position, guys. So there is that. As far as the days to cover as well, something I want to talk about that is sitting at 6.21, and essentially it's going to take 6.21 days to get out of short positions if hedge funds wanted to cover in a very quick time frame, and that puts a lot of pressure on them, right? Because if you don't get out right away, those cost to borrow rates are going to shoot up, so you're going to be losing on that end. You're going to be losing on your short position because the shares are just going to go up and appreciate in value, and it overall just means a squeeze could last a little bit longer and be a little bit more aggressive the higher the days to cover does get, and the days to cover is certainly increasing in a rapid fashion, guys. Now, last thing that I do want to talk about is AMC on a technical basis. Yes, we did close green today, up 0.69%, going down about 0.68% in after hours. I do believe that is just one of those algorithmic trading kind of moves. It's not really going to say anything until we open for trading tomorrow. Overall, was a green day, and we still seen this very strong support at the 50-day moving average. So if you guys have not heard at least my trading theory or trading practice that I am going to do with this next rally, is essentially, I think it is safe. Well, I shouldn't say safe, and nothing is safe in 2022 in financial markets, no matter what you're investing in. But relatively speaking, I think it's safe to be long above the 50-day moving average based off of historical performance of, when AMC breaks above the 50-day, you usually find support to the downside above it, right? Just like we have been over the past 1, 2, 3, 4, 5, 6, 7 trading days now. And you typically go higher from there. You can typically go 50 to 200% higher when you hold support at the 50-day moving average. And it's literally holding support at this moving average to a T. So long story short, if you were to initiate a position right now, and let's say AMC just goes down 20% tomorrow. Let's be overly aggressive here and say it closes under its 50-day moving average. That would be, you know, a pretty good indicator of this position might go against you, and you might want to cut your losses. And the good thing about that is really you're not risking too much. The 50-day moving average is only about 33 cents to the downside. So that would be how I would specifically trade AMC right now. But the risk to reward ratio looks really good heading into these blockbuster films in December for Avatar, and really heading into the next year or so. I think a lot of the negativity, at least for AMC, really for theaters in general, is probably on the back burners. Now, guys, we have seen pretty low volume day after day. Really, you know, 15 to 30 million shares trading hands is very low volume. And the fact that you are holding up on this very low volume is also a very good thing in my personal opinion, because what we have seen in the past is you get this volume spike in which we got when AMC, you know, had its couple 18-20% green days back to back, and we went up to 53 million for volume on November 14th. But typically in AMC's past, once you get to that volume peak and the volume starts to drop off after that, you tend to really go down in a big way. And that is not happening. You're getting valuation support from the news that we have seen, from the good earnings, and you're also getting a lot of people, a lot of traders, a lot of institutional investors and hedge funds stepping in to take on positions as well. And you can see this reflected in the Fintel data and the 13F filings that are coming out. And you can also see this reflected in the chart of AMC, guys. So above the 50-day moving average, long story short, bullish. Under the 50-day moving average, you got to lean to the bearish side, guys. So that is going to be it for this video. Hopefully you guys learned something. If you did not, let me know down below in the comment section what you would like to hear about. You know, you want some Moass talk? What do you want? More technicals? What do you want to learn about, baby? Let me know that down below in the comment section. In the meantime, hit that like button and subscribe to the channel because it is free 99 and has not yet seen inflation in 2022, guys. So enjoy the rest of your nights, your days, whenever you are watching this. I will see you in the next one.